Good morning, friends and fellow traders. This is Doug Campbell with Right Way Options, and this is the Morning Market Prep video for August 21st, 2024. Well, I hope everyone had a great afternoon and evening yesterday, ready for another wild and crazy day. We have some data coming out today that the market, of course, is highly anticipating, and that's the FOMC minutes. Hoping that it will find information, they will find information about future rate cuts. However, there's an even more important number coming out today that most people aren't paying attention to that definitely has the potential to move the market. And we'll talk about that in just a little bit. So, how about we take a look at what happened overnight? First off, Asian markets. Asian markets were mostly lower and a bit mixed last night. Australia was just ever so slightly up. The Nikkei was down 111 points, which is really nothing for the Nikkei, only 0.29%. South Korea eked out a $4.50 gain, while the tech-heavy sector, Hong Kong, was down 120 points or 0.69%, and Shanghai was down 0.35%. Let's take a look at European markets this morning. European markets are taking the bullish approach. They're green across the board here this morning, moving to the upside with the DAX up 0.33%, FTSE up 0.17%, and the CAC up 0.34%. Rather modest gains, but moving to the upside. U.S. futures are also green this morning, looking to the upside, trying to recover yesterday's modest pullback here in the market in high anticipation of those Fed minutes. If we were to take a look at what's going on in oil this morning, well, if we look at XLE, you can see XLE had a pretty rough day yesterday, pulling back as we saw those oil numbers pulling back on demand concerns. And there was also that hope of easing tensions in the Middle East, kind of moving things around. So we have oil this morning only up 19 cents a barrel at 73.35. We've got Brent crude up 20 cents at 77.40 a barrel, and natural gas is looking just a tiny little bit lower here in the pre-market this morning, but you can see it's actually showing here on UNG trying to push just a little tiny bit higher, trying to hold that inverted head and shoulders pattern. If we look at precious metals this morning, my goodness, precious metals have been all over the place here, but finishing up nicely yesterday on gold. Let's go to GLD here. Really a new record highs here in gold. This morning we're pulling back just slightly. Right now gold futures are only down $2.90, while we have silver, which also enjoyed a big move yesterday, ended up closing just slightly higher, but silver is looking for an upside move this morning. We've got copper, platinum, and palladium all moving higher this morning as well. And one of the major reasons is we continue to see that weakening of the U.S. dollar. Now, I don't know what we've got going on here in TC2000. I think there is a bad tick in the pre-market data that will have to be corrected. But what we've got going here is a break of this support. So we continue to see a pretty substantial decline here in the U.S. dollar that we'll want to be paying pretty close attention to. A lot of things depend on the value of the dollar, and that's really being pushed around here pretty dramatically. When we look at crypto this morning, Bitcoin is just slightly higher. Boy, it's been a long time since I've seen it move sub 100 points in its whipsaws. Right now, Bitcoin up $34 a coin. And most everything else in the crypto sector is a little bit lower. Let's take a look at our bonds here this morning. Now, bonds have been moving around just slightly. We've got the 2-year bond coming down just a bit here this morning to 4.00%. The 10-year falling to 3.82%, and the 30-year at 4.07%. So we're even seeing the really short-term bonds come down here this morning at 5.16%. So keep an eye on those, that weakening of the bonds, likely to see that weakening in the US dollar as well. And that will be helping bond prices move higher. We'll talk about that here in just a bit. So what does all that mean for today? Well, how about we settle in? Let's buckle up. Let's get ready for the Wednesday edition of the Morning Market Prep video. Good morning once again, everyone, and thank you so much for being here. I very much appreciate it. Let's take a quick peek at these charts and see if we can gain a little information about how we may want to approach the market for today. Remember, we want to shake off that bias. We want to look at the charts for what they are, not for what we want them to be. So first off, as you can see here with this little bullish push that we've got going on this morning, trying to recover yesterday's light little pullback here in the Dow, you'll notice that the next target up here is going to be reaching up to see if we can deal with the top of this big black candle. And if we can break through that, then I'm going to suggest our next area of resistance is going to be right up here. And then there's blue skies above. That would be all-time highs here in the diamonds. Now, if the bears were to find inspiration, one thing we want to be paying close attention to is the parabolic nature of this move, this rally straight back up here in the market. And if the bears were to get going here today, find some reason, and I think there might be some reason coming today that they could get inspired. If we were to push back down to here, there would be no problem with that. Holding that upside trend, holding a little support here, not an issue at all. But if that were to break, then we'd start progressing down through these areas here in the chart, and we might, with some really good inspiration, have that ability to drop into this gap. Now, if we were to drop into this gap and fail through here, obviously it would raise some worry in the market, possibly create a lower high, but I don't think it's tragic at all, because what that would do is bring us back here to test a bigger area of price support that runs all the way back over here. Bigger area of price support, and would probably be more of a healthy thing than this market that is just either running for the door in panic or racing in the fear of missing out. We need a little rest. We need a little pullback here in the market. I'm not saying we're going to get it, but that would likely be, or that would be a very healthy thing for the market. And you can see coming in here and filling that gap would bring us back down to some price support and actually give that 50-day moving average a chance to maybe catch up here in the market. Let's take a look at our SPY. SPY tried to make that move yesterday, left behind a bit of a topping pattern, kind of a shooting star type pattern in the chart. And if the bulls can push right on through that, break first through this resistance here in the chart, and then maybe push up, and we'll see if we can fill that gap. If we can fill that gap here to the upside, then the next move, as you can see, would be up here testing all-time highs in the SPY, and then possibly blue sky above that if we can find the inspiration for it. If the bears, however, were to find that inspiration, it's not really that hard to see where we would go. There is a little bit of support. Notice right through here, a little bit of support right in the middle of that range that we could come back and push back into. If that were to fail, then probably the low of that candle would be tested, and then we'll start progressing back down toward that possible gap fill here in the chart if the bears were to really engage. And once again, pushing back down into here probably wouldn't be a major problem with the market, except that potential lower high that would come into play, and you would notice that would be coming back to test that 50-day moving average as price support, which would honestly be a very healthy thing for the market. And you can see if where I just drew there would actually end up turning out to be an inverted head and shoulders pattern, a bullish pattern for the market. So again, I think it would be healthy for a little bit of rest. If we take a look at QQQ, showing a little bit of a shooting star pattern there yesterday. We didn't quite make it up here to this resistance in the chart, so if the bulls can continue to find inspiration today, that's where I'd look for the attack up in there. And if we can break through that area of resistance, then we might start reaching up in here just a little tiny bit higher to break the top of that black candle, and then we would look for this gap to see if we could fill this gap here in the chart, moving on higher. Once we get through there, up into this area, and then of course we'd be up here testing all-time highs in the QQQ. If the bears, however, were to find inspiration today, pushing back down, we might test yesterday's low, and then pushing on beyond, coming on down to this bigger area price support, as you can see across here, much bigger area price support in the chart. If we hold there, just no problem at all. If we continue to sell off, pushing down, again, we've got this gap in here that could potentially be filled. Now, filling that gap would raise some concerns, probably, and a little fear coming into the market if that were the case. But in all reality, I don't know that that would be a major concern. However, doing something like that would fail that 50-day moving average, and that would be a little bit more critical here on the QQQ than we're seeing in the other indexes. But a consolidation arrest in here would still be a very healthy thing for the market to do. Again, I'm not suggesting that should happen or will happen. I mean, I think it should happen, but I have no idea whether it will happen, and I'm not trying to predict that it would. Just to be watchful for the possibility. If it does, you won't be surprised. And the Russell had a rough day yesterday, pulling back here in the chart, but you can see we're trying to gap up here this morning. If the bulls can continue to find inspiration, well, first we need to break through here, and then we're probably up here testing or completely filling that gap here in the chart, and then we'll start moving on up to see if we can deal with this area here in IWM. If the bears were to find inspiration, not all that hard to see, we could come back, retest yesterday's low, and then start pushing back down through these levels here, trying to maybe come back here to this bigger area of price support. Remember, that comes back all the way here to 2021 and 2022. And breaking down below there, I would suggest this upside trend would have a chance of catching us in the chart. And once again, that pullback in here that fills that gap brings us back down toward that 50-day moving average, and I think that'd be a healthy thing for us to do, but we shall see. If we take a look at our VIX had a little bit of an increase yesterday, but nothing of consequence, and it really didn't raise fear. You'll notice that we came up here testing the underneath side of this little platform resistance in there. No break of that yesterday, just a little tiny resting consolidation in the market, which we were expecting yesterday. And if we were to see the bears continue to push today, and I think there may be data that could get them to push, maybe look right up into here as that next level up. But I don't think this gets into any kind of a problem unless we were to really push here in the chart, breaking quite a bit higher. And right now the market doesn't seem to be too interested in any bad news, just really focused on whether or not the Fed will cut rates. And if we take a look at our T2122, yesterday's move was a good thing for the market, relieving some of that upside pressure. We were overextended here, and as I mentioned yesterday, there's never been a time in T2122. I think everyone should watch this. Now remember, this is really important. T2122 is not predictive. don't think it's going to tell you, do not think it's going to tell you what's going to happen in the next day or the next period that you're looking at it at. That's not what it's designed for. It's designed to tell us that when we're in an overbought condition, we're in an oversold condition in the market. And that's what it's for. So when we reach that overbought and kind of that extreme overbought position, we should be tightening up stop losses. We should be thinking about closing out trades, capturing those profits. And if you are thinking about short trades and find a short pattern setting up, might be a good opportunity to set up a short trade. And that's what it's for, to just move with the market condition, not try to predict the market condition. So if we take a look at this, what this is telling us today is if those bulls can find inspiration today, well, they've opened up an opportunity for a retest up in here to push us back up. And I think there's every reason to believe that's a possibility here today. If the bears were to find inspiration, well, we know we have a big potential move to the downside. And unfortunately, with this parabolic run to the upside, we've really left no good support levels to the downside if we find some inspiration. So we could fall hard if we can't keep those bulls inspired. So just make sure and pay attention to that. We could fall hard. If we take a look at our T21 08, percentage of stocks above the 40-day moving average pulled back yesterday, but no harm, no foul here. This isn't harmful to the chart at all. As I said yesterday, we've got some good support levels down in here. We've got some good resistance levels here. So today it's going to be, will the data support us to move on higher, break some of these resistance levels? Will it bring us down in this level? Now, concern if we drop below the 50, of course, that is always a little bit of concern. And here, when there's half of the stocks below their 40-day. But keep an eye on that. We've got some good support levels down in here as well. Same thing is true with T2107. I'm not going to reiterate. Percentage of stocks above the 200-day. Little resting pullback yesterday. No harm in here. Good support levels below. Good resistance levels above. No particular worries here on this chart yet. And T2101, well, it showed us yesterday that breadth in the market was really kind of topping out, maybe temporarily, that we're showing that little hook over here. Maybe the market just needs a little bit of rest. Could be anticipation of some of the data coming out, and we'll talk about that here in just a second. So let's take a look at our economic calendar here for today. And our economic calendar is a little bit on the deceiving side here today. And the reason it is because it doesn't display or tell us about what I think is probably going to be one of the more important numbers of the day. So first off, let's take a quick look. We got mortgage applications. They've already come in here today. Let's take a quick look. They fell pretty sharply here this morning, dropping to 10.1 on the purchasing index, a negative 5.2, and refinance a negative 15.2. So really quite the pullback here on those numbers this morning, despite the fact that those rates are coming down. Interesting. If we take a look, we've got an Atlanta Fed business inflation expectations here this morning, and we've got a quarterly services survey coming out at 10. But it's interesting, it doesn't show us what will likely be the biggest thing of the day, and that's going to be revisions to the benchmark rates. This is investing.com, and when you take a look at investing.com, it says Goldman Sachs analyst cautioned that the upcoming benchmark revision in the U.S. non-farm payrolls is likely to overstate the weakness of the labor market. Okay, so the Bureau of Labor and Statistics is expected to announce today, and it's at 10 a.m. today Eastern Time, downward revision on Wednesday, potentially lowering the payroll growth by 600,000 to 1 million jobs. So if we look beyond Bloomberg, here's a Bloomberg report. The big release of the day is the U.S. set of revisions in job figures through the year through March that could see up to 1 million positions vanish. So this is what they are talking about here for today, and I think could be the biggest news of the day, although it is not on our economic calendar here to be paying attention to. So kind of keep that in mind, or 10 a.m. Eastern, a big move in the market could come if we get a very negative reaction. By the way, if you notice that in here, it said the report has the potential to shape the tone of Powell's speech in Jackson Hole. So if you are hoping that the Fed is going to lower rates, this might be the reason for that, because the numbers that we saw last Thursday on the jobs numbers would not support a rate cut. In fact, we saw estimates move down from a 50 basis point cut to a 25 basis point cut based on those hot numbers on the jobs front. If we get a revision like this could help you in getting that rate cut. Unfortunately, it would also show us that our economy is weakening substantially, and we could have negative reactions in the market to that. So be kind of careful. Now, if we take a look at what else we've got in here, we've got a petroleum status number, which of course be very important for those oil numbers today, a 20-year bond auction, and then of course the Fed minutes will be coming out this afternoon, and not uncommon to see a choppy market as we wait for those numbers to come out. So keep an eye on that. Now, this Treasury buyback, they're going to give us the results on that big Treasury buyback here later today. As we look into Thursday, keep in mind our normal jobless claims, Chicago Fed national activity, a PMI composite. We've got existing home sales, natural gas report. We got a Kansas City Fed manufacturing in there, some bond auctions, 30-year tips auction, and the Fed balance sheet on Thursday to look forward to. Keeping in mind that the Jackson Hole Symposium starting today, there's going to be a lot of talking heads out there, so be prepared for that as well. Let's take a look at our earnings calendar. And our earnings calendar, a little bit busier today than yesterday. We've already heard from Target this morning. Target reported better than expected, but once again, they gave caution, kind of guiding the next quarter lower. But we have found for every one of these stocks, when they guide next quarter lower, has been a reason here recently to just buy the stock. A great example of that would be Home Depot. Home Depot, ever since that earnings report where they guided next quarter lower, and in fact said sales are likely going to be off 3 to 4%, it's been a buy ever since. McDonald's did the same thing, and it has been a buy ever since. So watch those carefully. Maybe the market's got a clue that I don't have a clue, that if their sales are declining and the company is guiding lower, but certainly we're seeing rejection of those numbers as they're pushing these higher. We're also going to hear from ADI this morning. ADI moving higher this morning. We've got DY on that list. I better get the right symbol, DY. It's moving just slightly lower. Macy's reporting this morning and feeling a little bit of a pinch here, and TJ Maxx reporting this morning, moving to the upside. So kind of a mix there in that data, but mostly higher. This afternoon, one of our biggest notables is there's a few in there, but let's take a look. Let's just run through the list. We've got Allegiant Technologies that will be reporting. NDSN is on that list. SNOW is on the list. SQM, SNPS, URBN, keeping that retail theme going here. WLF is on the list, and Zoom Mobile for those notables for this afternoon. So keep an eye on those. Let's take a look at a few stocks that could be setting up for today. But before we do that, everyone, if you could do me that quick favor, if this is the first time you've seen these videos, please click that subscribe button on YouTube and also click that bell icon when it pops up so you'll be notified every time I post a video. And if you find these videos to be useful or helpful, if you could do me that favor, and that would be click that thumbs up button, leave a brief comment. That helps the channel to continue to grow. Thank you so much for everyone who does take the time to do that. I truly, truly appreciate it. Means the world to me. So thank you very, very much. And for those of you who support the channel through the Buy Me a Coffee link just below the title of the video, thank you so much. You guys are truly, truly awesome. I really appreciate the kind support for the effort of putting these videos out. And it makes me, I feel very blessed to be able to help people in their trading with this kind of information. No prediction, nothing like that. In these videos, and the show of that support is really meaningful to me. So thank you very much. Let's take a look at some of these charts setting up. Remember, everyone, these are not recommendations to buy or sell any security. You need to do your own due diligence. Be very, very careful in this market, and really be paying close attention around that 10 p.m. Eastern time. When that BLS revision comes out, we could see some fireworks in the price action. Not saying we will, but we could see some fireworks in the price action if the market happens to be suddenly worried about the weakness of the economy. Let's take a look at a few of these stocks. Let's take a look at Spotify. As you guys know, I talked about this one yesterday. Had that nice that alert in here, and this is something I'm always looking for in the chart. I'm looking for the pattern before the big candle pops, and my trading strategy, the 3-8 trap, does that for me, where I can see these patterns forming before they pop. I can place a price alert and then wait for the potential trade. And you can see Spotify pushing on through here to the upside. Every reason to believe that could continue, but if it does pull back and rest a little bit in here, no worries, then just wait for that next opportunity in here. Spotify looking good overall. And again, there's that Mickey D's. There was that nice little tight consolidation after their earnings report, and we just rallied straight up off of that earnings report. I placed a price alert on that, and wow, nice pop in there, pushing to the upside. McDonald's looking very, very good. Let's take a look at some of the other things in here that actually are a bit of concern. When we look at the US dollar, and again, I think this candle here, there's a bad tick in the system. They'll probably get that corrected today. But right now, we have got a dollar that is quite weak. And if we continue to see the weakening of the bonds and the likelihood that the Fed will cut rates increasing, then I would expect the dollar to continue to weaken. And what that will have an impact on is it's going to have a major impact on commodity prices. So when we take a look at gold, I know a lot of folks are thinking gold's at an all-time high. There's no way it can go higher. Well, if the dollar weakens, I think it can go higher. So I would keep an eye on this. Any rest, consolidation, pullback in here, watch that carefully. Look for that next opportunity. I'm going to say the same for silver. Now, I think silver needs a consolidation. I think it needs a rest. It's a little bit stretched here in this short-term move, but a little bit of rest, a little bit of pullback in here would set up that next opportunity, I think, for an upside move. So keep an eye there on silver if that dollar continues to fall. Take a look at palladium. Palladium setting up an inverted head and shoulders pattern, showing some bullishness here this morning. You can see that pattern setting up in here. I'd keep an eye on palladium for that opportunity that could push on through here to the upside. And then, of course, we want to look on the bond side of things. Take a look at TLT. what's going on here in TLT. It's been running in this upside trend. Now, I do think that this little push to the upside might be a little steep because it's showing how the dollar is really collapsing here on those bond yields pulling back. We've got a lot of confidence that the Fed is going to start cutting rates. What's interesting in here is that confidence is not translating into saying that, well, when we cut rates, there's usually something wrong with the market, such as the jobs market. So we'll want to be keeping an eye on this pretty closely. But right now, TLT showing lots of strength. Once again, I think it needs a little bit of consolidation, a little bit of rest in here, but the way it's going right now, we may be up here at 100 before too long in TLT. So you want to keep an eye on that. You might also want to keep an eye on like BND bond fund, showing lots of bullishness here, moving to the upside. Other places, take a look at XLU, those utilities continuing to hold in there. It looks like this morning maybe catching a little bit of a pullback here off of this resistance in the chart, but utilities have been staying strong, and a lot of those defensive sector stocks like Coca-Cola have been staying strong here in the market as well. So keep an eye on those. There's a little bit of that uncertainty going on here, and folks might be seeking a little bit of safety. So this video is getting long, so I'm going to cut this off here, but I want to remind everyone once again, be paying close attention around that 10 o'clock hour for the BLS revisions. I think, those happen all the time in the background and nobody ever pays attention to them. Not a big deal. 600,000 to a million change. That's significant, and we could see the market react to that. So be prepared for that possibility today. So with that, everyone, wish you all the best. Have an awesome day. Thanks for being here. I hope you have a productive and profitable day, and I will see you right back here bright and early Thursday morning. Take care, everyone.